What happens now as we continue to see this legal tussle over the U.S. election outcome?
Well, unfortunately, we just simply have to sit here and wait and see what the outcome for both the presidential and the Senate races are. Those are both quite crucial to the economic outlook. The key thing here is that if we're going to get a split government, there's a higher probability of some degree of gridlock. And with that, we're still likely to get some sort of fiscal stimulus. But if we don't have a unified government under one particular party, it's probably going to be a smaller stimulus that's going to take longer to come. And that's part of what I think markets are reacting to, especially the rally in Treasury yields.
What does that mean for Asian markets? Because we had seen some positioning ahead of this election that we would clearly see Biden win. We had seen outperformance in the Chinese equity markets, not to mention the offshore yuan, and policymakers perhaps trying to preempt that by trying to weaken the currency as well.
Well, we think that North Asian markets continue to offer really quite strong opportunities for investments. The markets were outperforming before it was clear, or the polls suggested that it was clear that there would be a Biden victory. And we think that'll probably continue for a couple of reasons. First, the Asian markets, especially China, is just less volatile than the U.S. market. It's less correlated. And China in particular has COVID under control. It has fiscal and monetary stimulus that's supporting a stronger than expected recovery in its economy. It has a large domestic economy that can fuel that recovery and keep it going, even if we get slowing in growth in the West because of this recent increase in COVID infections. And crucially, China has very interesting technology plays across e-commerce, media, entertainment, education, and even e-health. So there's a lot that we think investors can look at in China as alternatives to diversify portfolios away from some of the risk in the United States and Europe.
So, Ray, this might be oversimplifying it, but when it comes to the equities outlook, it doesn't sound like that sort of looking to seek havens in Asia where the domestic demand story is strong, where the virus is under control, that hasn't really changed regardless of what the outcome is in the US.
That's absolutely right. And it really focuses on North Asia because of North Asia's control of COVID, its larger domestic markets, and its greater variety of direct plays on technology.